Hi, I'm Jimmy. In this video, we're looking at the recent credit rating downgrade that just hit Ford stock, ticker symbol F. Now, we're going to look quickly at how this downgrade could affect Ford stock and ultimately Ford's business, and then we'll touch on what we think is the best move now that this downgrade has happened. What do we think is the best move to do? Do we jump into the stock or do we wait? Okay, so what happened here? Well, just so we're all on the same page, there are three main credit rating agencies. There's Moody's, S&P, and Fitch. And this is the way each of them rate companies. So everything above the red line is considered investment grade. Everything below it, non-investment grade. Now that's a nice way of saying junk status. That's what they used to call it. But you might also hear it called high yield bonds. Everything below it would be considered a high yield bond. So on this scale, Fitch currently has Ford sitting at a BBB rating. That's a medium grade rating, but it's just above the non-investment grade rating, which every company is trying to avoid if they can. Now, Fitch also has Ford as with a negative outlook. And when we switch over to S&P, well, S&P gets the same thing, BBB rating and a negative outlook. Now, the negative outlook is important because generally the outlook will fall into one of three categories: positive, negative, or stable. And in theory, once a company has a negative outlook, well, it's much easier to drop into the next rating lower, or if it was positive, it would be easier for them to jump up a rating. And these ratings are important because ultimately, these ratings play a huge role in the interest rate that the company will pay on their debt. The lower the corporate credit rating, the higher the interest payment will ultimately be, which will also lower profits, lower earnings per share. It affects everything right down the line. Now, it's also important to point out that if a company already has debt that is out there, debt outstanding, a new rating generally doesn't affect existing debt. Sure, it might affect the price of the bond as people buy it or sell it, but the rating change doesn't make the interest payments on existing debt any higher, at least for most traditional types of debt. Okay, and this brings us to the big news for Ford. So Moody's had Ford's rating right here at Baa3, and they had a negative outlook. Well, a couple of days ago, Moody's downgraded Ford to Ba1, and they upped their outlook to stable, which is a good thing. But this is big because this pushes Ford Moody's credit rating below the investment grade, the red line here. So the fear now is that S&P and Fitch will jump on board and downgrade Ford's credit rating as well. So why did Moody's downgrade Ford, and what does it mean for Ford stock? Well, it seems that Moody's view on the macro picture for demand seems to have turned a bit more negative, especially in developed countries. Then in the Chinese market, well, between the trade tensions and increased competition, well, it seems that Moody's believes that things are going to be a bit tougher for Ford going forward. So clearly there are some big picture issues in the long run from a macro perspective. But this is the number of auto sales on an annualized basis going back to 1989. And as we could see, the past couple of years for auto sales has been pretty good. And this isn't just Ford, this is all new cars sold in the US. So one fear is that if Ford is getting downgraded, if they're reducing their credit quality at this point when the market seems to be doing fairly good, well, what's going to happen when the country eventually hits a recession? Similar to the Great Recession back here when sales really slow. Now, Moody's also brought up a few other interesting points. They commented on the margins of Ford. And as we could see, this is Ford's gross profit margins going back the past couple of years. And yes, it seems that profit margins have been trending a bit lower. And if we think that this is going to continue to fall, that could end up being a real problem. Then when we switch over to Ford's debt, well, here, once again, this is going in the wrong direction. So one quick point here is that I pulled the annual numbers so we can get a look at the big picture. And I actually did the same annual numbers for the balance sheet so we can get an idea of the debt that they have. But with the balance sheet items, it often makes sense to check the most recent quarter since any balance sheet represents a single point in time. So in theory, we want the most recent point in time. So when we pull down Q2 numbers, well, things actually got a bit worse. Okay, now things aren't all bad. Ford also has some cash. Once again, we're doing the same thing. These are annual numbers. Now we switch over to the most recent quarterly update. And as we could see, Ford actually picked up some cash in the past couple quarters. So I think this is worth keeping in mind that they get about $39 billion in cash right now. Okay, now we get down to the meat of the whole thing. So what's going to happen next? Well, right now, Ford is trading for slightly more than $9 a share. And after this news broke, well, Ford stock fell by about 5%. But I actually don't think that this downgrade is going to hurt Ford all that bad in the near future from a fundamental business perspective, not necessarily a stock perspective. Now, I'm actually carefully saying in the near future because a lot of it depends on a few different things going forward. Ford has been, they've been working on a restructuring. And although it's making progress, it still needs to go some distance before it can help protect them in the economic downturn. In theory, this should improve their profit margins. So the question for us is, how much is this downgrade going to affect short-term costs? And this is what I could find when it comes to when Ford's debt matures. So some debt retires in 2019, some of it's going to mature in 2020, and then even more in 2021. Now, this is important because oftentimes companies will replace debt that is maturing. If they need to retire that debt, they will issue new debt. And in this case, they're likely to issue it at a higher interest rate and therefore a higher interest expense. So between these 3 years, well, Ford owes about, let's say, 35 or 36 billion. But if we were to switch back to cash, well, we can see that they're sitting on about $38, $39 billion in cash and short-term investments. So in theory, they can handle at least the next few years of debt if they need to. And I also think it's important to point out that Ford's Fitch rating and S&P ratings, well, they haven't been downgraded, at least not yet. So this could eventually be a good thing for Ford if they had to issue more debt. So if they're able to improve margins when they complete their redesign plans, what does this ultimately mean for Ford stock? Well, I'm not sure personally that I would be jumping in here to buy Ford stock. They do have a decent dividend yield of right around the 6% level, but their dividend is going to take away some of the cash, and that could ultimately be a problem if especially if the other two rating agencies start to, downgrade things. So yes, they're paying a good dividend, but that takes their cash. They need that cash for the debt, so it's sort of a double-edged sword. But if we already owned Ford stock, well, if I already owned it, I think that this would not cause me to go out and sell the stock. I think that I look at this as a red flag. I don't think we have to pull the emergency chute. I think this is a warning shot fired, thankfully, by Moodys. So it gives us a chance to examine what's going on, look at their redesign plans. Do we think that Ford's going to be able to complete that before the economy takes a big turn and Ford ends up in trouble? Now, I understand the rating downgrade by Moodys. This is sort of the perfect storm of news with tariffs, struggles in China. They're currently restructuring things. There's question marks as to the economy. So I understand the macro question marks. But for me, I think it makes sense, no matter our position, if we already own the stock, we're thinking about buying it, I think it makes sense to sit steady here and try hard not to overreact to this type of news. I think that at the end of the day, it could make a lot of sense to jump in and buy it if we believe in their restructuring plans. But what do you think? Do you think that Ford's a good buy here? Is this a buying opportunity? Is this a good reason to jump ship? Are you sitting and waiting and just holding? Please let me know what you think in the comments below. If you haven't done so yet, hit the subscribe button, hit the thumbs up. Thank you so much for sticking with me all the way to the end of the video, and I'll see you in the next video. Thanks.